Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. Gold has been on an explosive bull run. It's now rallied from $1,450 per ounce up to $2,075, which is a parabolic move of over 5,000 points within the space of just 4 months. So that's an unprecedented gain like we haven't seen before. Now usually moves like this, they take years, not months. And finally, of course, gold has started to show some signs of a much needed healthy correction following its impressive rally since March. So a pullback in the bull market between 5 to 10% is very normal and expected, and that's effectively what we have seen in the latest week. So after the parabolic move, the recent pullback, that brings in some much needed stability into the bull market and really creates the launch pad now for prices to skyrocket further and break new records in the months ahead. The last major bull market in gold lasted 4 years, and that was from 2008 to 2011. During that period, prices surged 120%. Previous to that, we had the bull market in the 1990s. Gold prices surged over 600%. And previous to that, we had the bull market in the 1980s, where gold prices surged by over 1,700%. So far this year, gold prices have only gained 35% at their peak. So right now, in the current bull market cycle, it's still in its infant stages and it's just getting started. So from a fundamental perspective, nothing has changed. Central banks, they plan to keep interest rates lower for longer. Government debt is spiraling out of control, and inflationary risks, they do continue to rise as government debase their currencies. The potential upside is still huge here for gold. Even Warren Buffett is selling banks and buying gold stock. And we've said it before, extraordinary times, they create extraordinary opportunities, and right now we are living in unprecedented times. And in these fast moving market conditions, data is power. So if you want to navigate these markets with ease, of course you need to be utilizing a research driven approach to the markets. Technical analysis, outdated technical indicators will not work in these markets. Those days are long gone. They won't work in 2020. If that's all you're relying on to get edge in the markets and you FOMO in, or you miss out on opportunities, or you're getting chopped up, it's because you're relying on purely technical analysis. Many retail traders, they FOMO'd in on the recent tops here on silver and gold. They got squeezed out during the recent pullback. They've missed the opportunity also to buy back at a discount on the dip, and now prices have already shot back up, and many retail traders have again completely missed the moves here. And in these fast moving market conditions, data is power. So the greater the data and intelligence you have access to, the greater of course your edge is going to be. And that's where it's very important to know what the hedge funds, the banks, how they're positioning themselves in the market, when they're buying, when they're selling, so that you can get in and out at the right time at the key levels of liquidity, utilizing a research driven approach to the markets. Now, we mentioned with you last Tuesday that we had the news item earlier on in the day that Goldman Sachs have banked profits on their long position on silver. We discussed it with you previously, where the targets there were $30 per ounce on silver. We came just underneath that target. Goldman Sachs at the beginning of last week came out with a statement that they were taking profits off the table on the precious metals. We were able to capitalize on that. In fact, we banked a 2,000 point move on palladium and 350 points on silver just that morning. So we were able to be nimble, move fast, and lock in profits as the prices started to pull back and then reload lower again with the metals. So with that said, let's go over to the charts and let's talk you through exactly what we're looking at here as we go into a new week. So where we're poised with gold here going into new week, it's trading at $1,943 per ounce here. You can see where we had the dramatic sell-off at the start of last week. Buyers came in midweek with gold capitulating on a breakdown to $1,860 per ounce. Already we've seen an 800 point move to the upside, or $80 bounce back in price here. Now, I would watch gold very carefully next week alongside silver and look at the gold silver ratio as well. So what you need to see happen here effectively for gold and silver to go up in the short term would be the gold to silver ratio to continue to break down. In fact, I'll show you the dollar index here as well. If we have a look at the dollar, if the dollar continues to be under pressure and we get a break and close below 93 going into next week, this is going to provide further support for the metals here. And if the gold to silver ratio continues to accelerate lower as well, this will also provide an environment where silver and gold will do well. You want to have a very close look at both of those correlations going into next week. In fact, on that note, another trade opportunity which we identified with you at the beginning of last week was palladium. And for those of you that were taking notice of that and looked at palladium at the beginning of last week, right off the Sunday open, palladium caught a bid, and in fact it broke out 2,000 points in our favor, which for those of you who trade the precious metals, that's the equivalent of gold moving $200. So it would be the equivalent of catching a move on gold, for example, from 1,800 US dollars to $2,000 per ounce in the space of just 2 days there. That's the breakout that we saw on palladium that we identified with you last week on the week ahead commodity report. And of course, we discussed with you in detail that palladium, there is correlation with Tesla, where palladium is being utilized in Tesla batteries. In fact, we had the update last week regarding Tesla stock split. Tesla prices took off to the upside, and so did palladium. So it was a great opportunity to benefit, and well done to everybody who caught that move. Now, alongside gold and silver and also palladium, keep an eye on platinum too here. We did mention going into the latest week that platinum here, you wanted to look at this whilst it's still below $1,000 per ounce. The gold to platinum ratio is the most extreme it's ever been, which means platinum prices relative to gold have never been this cheap, and there's going to be a great opportunity on this market in the coming weeks and the coming months here as we start to see a reversion to the mean here for platinum prices. So I would keep an eye on this market. I do look at dips as buy opportunities on platinum. We've continued to see hedge funds and money managers increase their overall net long positions on both platinum and also palladium in the latest week. So moving back to gold here and what we're seeing in terms of price action. What gold needs to do going into next week is, in order to get a continuation, we need to see basically a break and a close above the 1,966 US dollar per ounce handle. If we can get a break above those levels, then we can start to make a move back towards the recent swing highs here, and certainly back towards a magnetic level of 2,000 US dollars per ounce. So we need to see a little bit more upside here. On the lower time frames, you do have a bull flag that is developing here on gold, but we need to see more follow through as we go into next week. And many of you will be aware of the typical cycle for gold here, but often you can see counterflow at the start of the week, and you tend to see the breakouts later on in the week. The takedown of gold that we saw last week occurred on a Monday through to Tuesday, and again, this is what we could have going into a fresh week here, so be mindful of that. And I would look at those dips in price. As long as they get supported and you look out for that buying evidence, which is very important, then I would look at the potential for a bounce higher here. If we can break and close above that key level going into next week, then we can certainly start to make a move back up towards that 2,000 US dollar per ounce handle. So now moving over to silver as well, you can see in fact where silver dropped down to $23.50 per ounce here. In fact, we banked the remainder of our trade there at $27 last week, so that turned out to be a nice 350 point move for us at the Gold and Silver Club. As many of you are aware, for each lot, basically each contract that you have on silver, the way that we trade it would be worth at least the equivalent of 10,000 US dollars per $1 move. So if you're able to bank, for example, a 350 point move on silver as we were doing last week, each lot would essentially make you $35,000 on that trade. Now, you may be trading multiple lots. You could be in at 10 lots, for example, in which case obviously you're making 350,000 US dollars or pounds or euros and so forth. It just depends on your position size. But just to put that on your radar, move like that we've capitalized on silver in the latest week is a big move here in a very short period of time. As I mentioned before, these are unprecedented moves that we're seeing in the market, where you get such fast moves that you're able to capitalize. Moves that would often take weeks and weeks to materialize are just happening in the space of a week or two now on this market. So here it is again where we had our previous trade. This is down at these levels before the breakout from the 23.50 level, and we booked our profits at 27 US dollars per ounce. Now on the retracement here, we have seen a tap back down towards that zone again, back down towards 23. We've come back up to 27.50. We're consolidating a bit at the moment. I would look out again for those correlations. I want to see if the dollar will weaken and the gold silver ratio will break down, and whether silver can start to make a move back towards the highs that we saw towards the end of the week and see if he can get a break and a close back above 27.50. If you have a look at that on the daily chart, if silver was able to get a continuation here, then you've effectively got a bull flag, and this is where new sellers come into this market would start to get squeezed. But again, look out for potential counterflow at the start of the week. We may see a bit of this over Monday or Tuesday. We may not, but if we do, just be mindful that usually the cycles here are the metals. They tend to be weaker at the start of the week over Monday and Tuesday, and stronger later on in the week from Wednesday through to Friday. So there's quite a lot to be looking at with respect to that over the next few days. But the major news items that you want to have on your radar here as we go into end of August into September as well are going to be the FOMC statements, of course, that we have in September. We have the European Central Bank announcement, and then in the weeks after that we have the US election and of course Brexit as well. All of these news items, they provide uncertainty in the markets, and this is what can cause a further catalyst for breakouts here and continuation patterns on the metals as well. So again, gold, very similar to platinum with this respect. We do have a potential bull flag if we can get a break and a close above that 1965 zone. Then you can really start to see gold build momentum and come back to that neckline that was broken at the start of last week. That's what you want to look out for. But again, be mindful that we could get some initial counterflow at the start of next week. And of course, if you would like to learn a research-driven approach, join a community of successful traders, there is an opportunity for you to do so. Members get access to our exclusive live trading room webinars. You have access to our real-time trade alerts, trading research and market insights, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.